All right, everybody, welcome to the HPT Mentorship Webinar. This is the webinar where we break down the details, right? Like these webinars are primarily made and focused to help us realize what is working, what's not working, and just to get like a general understanding of where we're at, how the strategy is performing. Do we got to tune anything? Do we got to upgrade anything, modify anything? Moving averages that we like to use, entry criteria, like the real detail. Right? This isn't the fluff. This isn't the look good webinar. This is the detail. You can watch this webinar and benefit in a manner that's actually going to serve you, right? Like you're going to go into Monday knowing what to look for to actually pull that trigger to get results. Like this isn't like this was the perfect trade Monday. It was no, I followed this process, this criteria. Therefore, I came out on top or I didn't. What needs to be changed or what should we focus more on? That's the main goals of these webinars, is to help everybody really figure out, like come up with a game plan, right? Like to really have that plan. Like what we've been doing lately has been working very well, is using the areas of value and the moving averages. It's so crazy. So many traders go, dude, Josh, I'm struggling with patience. I need more discipline. I'm like, no, you need more awareness to what works. Because if you knew what worked, you wouldn't defer from the plan, right? Like one of the big shifting points in my trading came from understanding, hey, like I don't want to trade far away from a moving average. If I'm trading far away from the 20 EMA on the 2 minute or on it really doesn't matter the moving average, right? But what matters is if you're extended from a moving average, price is probably going to come back to that moving average. So that was like a key, that was a really big factor that helped me start trading a lot better. And that's something I want to talk about, like this trade right here. Okay, so this was Monday morning. We're going to jump right into it. Just some quick details here before we get started. So you're going to see some lines on my chart. Okay, this right here is previous day high. This right here is open print. This right here is end of day. And this right here is previous day low. All right, so there's 4 main price points on my chart, usually every day. These are our critical levels. All right, so the market opens up and we get this really large green candle that's ignored, right? So once again, this is what you're going to hear us call a GBI. This is a green bar that's ignored. And what it really means is that there's a lot of trapped buyers up here. Okay, these are what we call areas of value. All right, and the area of value, it's valuable because something's going to happen here that's going to help us make money. All right, when we see a green bar get disrespected, especially off the open, this means there's a lot of liquidity here, and it could either act as a magnet or it can act as a point of interest, okay? Like somewhere we want to go long. So the market opens up, we get HPT crossover criteria. We get moving average cross, we get a green bar ignored off the open. I don't go short, okay? I don't take this short. And the market starts to get away. Now, we get another green bar that's ignored right here. So this would become an area of value. But again, I don't go short here. And I primarily don't go short here because of how far away we are from the moving average, the 20. So if you take anything from this webinar, let it be trade off the 20, whether it's on the 5 minute, whether it's on the 2 minute. All right. And we're going to go into a lot of details today about this. But when you trade off the moving average, guys, you make way more money and you lose way less money. So this is a recipe for consistent profitability, okay? Trading off the 20 EMA. Now, it doesn't mean you take every 20 EMA retest. It doesn't mean that all of them are going to work. And once again, we're going to go over examples to help, give you guys better understanding, better visual, details of how to do this correctly, okay? So I don't go short here because of how far away we are from the 5 minute 20. Now I'm going to drop down to the 2 minute time frame, which has been our money maker lately, big time. Every trade I took this week was off the 2 minute. Okay, I used the 2 minute to identify opportunity. So my cursors are linked. I'm going to make the area of value. Okay, it's in gray. Okay, The area of value, once again, is literally this green bar that's ignored. Anytime I get a GBI on a 5-minute time frame, I draw a box around it. So then I drop down to the 2-minute and I'm looking for a short. But for me to short the market, I need some sort of play off the 20. Because if I'm extended from the 20, I'm vulnerable. I don't like vulnerability. I've gone through the data. Most of the trades, the HPT crossovers that are very successful, are bouncing off the 20, okay? This, I'm not vulnerable, okay? We took a long play right here, and I wasn't vulnerable whatsoever because my stop loss goes outside the 20. If I'm entering into a position here, all right, and I go short right here, I technically need to account for all this, right? Price can come back into here, could come up, then can continue down, okay? Now, this right here is vulnerability. I don't want vulnerability, okay? When I'm vulnerable, I'm in drawdown. I'm half the risk, 30%. If I don't have to, I'm not going to, all right? So instead, I wait for this play, right? Because we're back in the area of value. Buyers are showing a lot more strength. How do I know this? Because go back to the chart on the left. What's that right there? Okay, this is a red bar that was disrespected. So once again, this is helping me identify the shift in market conditions. All right, we got bearish, higher, lower low, higher low, right? And now we're breaking structure, or we're actually retesting structure, but now we're getting that red bar that's disrespected. Okay, so this becomes our new area of value. Okay, and then when I go over to the 2-minute, what's this right here? Bam! A beautiful bounce off the 2-minute 20. Now, I'm going to take this from my boy Todd, who's here with us today. The 20 doesn't always get respected, right? Such like this. But when it does get respected, you should definitely play off it. And this is like, I'm doing a lot more studying on this, but like, when you guys look at the 20 or any moving average for that matter, I want you to think of a reference point, okay? Like the 20 clears out noisy price action, okay? It's the average price of all the price points throughout the day divided by a period of time, okay? That's what a moving average is. What does it do? It actually cancels out the noise. It gives you a much more clear understanding of the trend. So when it comes to price, this becomes our reference point. Now, you can look at this and go, well, Josh, it didn't even respect the 20 here. The 20's trash. Okay, that's an argument. Or you could go, maybe price was unhealthy right here, and I shouldn't be trading. Okay, so it's a paradigm shift. It's a completely different way to look at trading. So now I'm easily able to avoid trades, avoid chop that is going to make me vulnerable, and instead I'm capitalizing off the best point of the day, in my opinion, because my risk is going right below the candle that I get in on, right? So once again, just to be clear, the detailed entry is the area of value off the 5-minute, okay? The 20 being respected, once this closes, I enter into the market long, and my stop goes right here, okay? So area of value, 5-minute, and then drop down to the 2 and look for the 20 to be respected. All right, that's one way that we could trade. I took a long right here, and I took a long right here. Okay, well, it was more like right here. Okay, but that's why I took the long. So I went long right here, and I went long right here. Both trades were absolute beautiful setups. Once again, playing that 20 EMA. All right, so that's Monday. Todd, at any moment, too, if there's a certain trade you want to talk about, feel free to jump right in. But I'm just going to keep cooking over here. Let me make sure everybody, okay, I think I'm good. All right, so that was Monday. Monday's price action. Let's go into Tuesday. Tuesday, phenomenal day. Really good price action. And once again, though, I just want to talk about what it is we look for every day, right? Because at the end of the day, it's all about that repeatability, okay? And in my opinion, actually, Tuesday was a little, I don't want to say it was tough, but I struggled to enter into trades on Tuesday just because of how quick this was happening, okay? So we open up And initially we're opening up above the previous day high, right? So we're in all-time high territory, and now we get this really nice shift, and price comes up into the 20 here on the 5-minute. Can't close outside the 20, so we get a really nice move to the downside, okay? We get a beautiful green bar that gets ignored right here, and then we get another green bar that's ignored right here, okay? Now, once again, these are on the 5-minute time frame, and if you go to the 2-minute, you can see we weren't really getting that nice retest of the 20 EMA. But the areas of value were being respected, all right? Like if I draw a box around the second one right here, you'll see price breaks through and then can't break the area of value, all right? So these are things that you want to see, right? In a nice trending market, this is the type of things you're going to notice, okay? You're getting those GBIs, green bars getting ignored. You got that healthy 5-minute trend. Market's just selling off like crazy, nonstop, all over the place. Give me a minute here. Let me drop down to the 2. Let's just see here what I do. Where was it? What trade did I take? Was right. Oh, okay. This one. Okay, so say you missed the morning. All right. This is how I like to still identify opportunity. I wasn't able to get in on any of this. I was just kind of late to it. It was happening kind of quickly, but I still used the area of value. So right here off previous day low, you'll see we got this nice GBI, and then price comes back up into the area of value. And now this is where I start dropping down to that 2-minute time frame, and I'm looking for a short entry, okay? So I ended up taking 2 trades. One was right here, and then one was right here. And now, let me just zoom in here a little bit. Get out my little cursor right here. Boop, boop, boop. Okay, so once again, here's our area of value. Price comes into it, and we start to get selling. So now, as we come back into this zone, and we're retesting, I spot this green bar right here that's ignored. I enter into the market short, and I capture myself a nice little short play to the downside. Then once again, price comes up into this level, and I capture a nice little short here, once again, to the downside. Now, what I want to talk about is like, you don't need perfection, right? And I bet Todd and other veterans can attest to this, but like, you don't need perfect trades to make money. Both these trades right here, both made me over $300 each trade, right? That's anywhere from $600 to $700 this day. Trading one contract each time, 2 very simple trades, okay? And just staying really focused on, okay, once I'm up on my position and I'm coming into the low, I'm going to scale, okay? Like initially I was trading into low of day, locked in a nice move here, and then locked in a nice move coming back down to the low side, and then I called it a day. Like you're not always going to see the market clearly. Like in the morning, it was selling off very quickly. I was frustrated. I didn't get the trade that I wanted. It was just happening very fast. So instead of blowing the account or going completely retarded, I just stayed patient. I went to the gym, came back to the market, and I'm like, okay, where can I get into the market with low risk? And you'll see right here, we get that green bar that's ignored. So that was an entry short. Boom. Once again, sticking to the details, right? Like how many times have we blown accounts, lost tons of money just because we defer from the plan because we're frustrated, right? I've done it so many times. You get frustrated because you're always right behind the ball. You can't get in correctly. Maybe you miss it. So now you're frustrated, and since you're frustrated, you automatically get the case of fuck it's. And then next thing you know, you're going completely retarded, blowing your account. Like, instead of doing that, I walk away from the market. I'm like, dude, I don't need perfection today. I literally just need about a 50 cent to 60 cent move, and I'm good. So where can I get in with low risk? And that's where I got that green bar ignored, entered short right here. All right. And then once I trim that, I got a nice position. Once again, I draw my box around the area of value. So when price comes back into the area of value, I look for another GBI, which we got, and I entered in short here, targeting the low. Okay. So once again, right, like just getting in and out. So not every day. You're not always going to see things perfectly, even on perfect price action. But I'm sure you guys seen me in the Discord. I was like, dude, if I just trusted the strategy today, I would have been fine. So I went home and I'm like, okay, what was my mistake? I didn't trust the strategy. So coming into Wednesday, which was beautiful price action, I was like, I'm going to trust the strategy completely. And once I see the criteria I'm looking for, I'm going to take it. All right. So, I mean, Wednesday was so damn beautiful. Look at this. Market opens up. We get a green bar. And this is important, actually. I really want to talk about this. We get a green bar ignored. So the old Josh would have shorted this, right? But now look at the 2-minute. The 2-minute here, we're far away from the 20. So I don't want anything to do with it. By the time we get the green bar ignored, we're very far away from the 20 EMA. Vulnerability, I don't want it. So I stay patient. Buyers show up, completely disrespect that red candle, and now there's a lot of trapped sellers right here. So I draw the box around the RBI and I go, okay, if price can respect the 20, I'll get into this. So price comes into the 20. We respect it on this candle. We respect on this candle. We respect on this candle. Once again, detail. We can't close outside the 20. So I end up entering into the position, right? We got this red bar ignored, hopped in the market long, caught this glorious move. And once again, right, like top-down approach. Get the RBI, the GBI, drop down to the 2-minute, and see if you can get some sort of play off the 20. This has been a really effective way. Now, it doesn't always work perfectly, right? Like the day before, right? We weren't getting the retest of the 20. So you gotta be like water, where you can use your areas of value in a way that really help you navigate price. Where you're like, okay, I might not be getting perfect retest of the 20, but I still want to be close to it, right? So, Todd, are you still on?
Yeah, I took that exact same trade. Just process.
Beautiful.
And once you trade the same strategy for so long, it's just the more you do it, there's no thinking.
Yeah.
Because I try to think about it as where am I put my risk? Is my risk in a good place?
Yeah.
I try to think of it from a risk up perspective.
Yeah.
And if you go back to Tuesday,
yeah,
a trade I'll show you I took. It was I think a 10-12
let me see.
candle your time.
10
on the 2-minute.
Right. Yeah, right here, this guy.
Yeah, that's
oh.
And my thinking is the 20 is going down.
Yep.
We made a lower high and we're coming up to the 20. And if this is respected and this green gets taken out, that's another lower high. Look at my risk.
Yeah. Tight. You know what, Todd?
Super tight.
I want to pick your brain here for a little bit here. Look at what Todd's doing here, okay? He's playing the 20, but it's not perfect retest. Okay, look at this. Now, just because it's not getting retested perfectly, Todd's not going, oh, we're done. Can't get in. Okay? He's going, every time price tries to get above the 20, we get these rejections. Now, he's using the moving average as a reference point, right? Like, it's not a perfect tool. There's no perfection in the market. There's no certainty. And I'm speaking to myself here because sometimes I search for it. Like, oh, I want that nice. I'm going to play safe today. I want that perfect retest. I think we all do. And I just want to remind ourselves that's not always the case. We have to use these as reference points and be like, okay, like this is a pattern. This is a recurring pattern here where we're jumping above the 20 and we suck down below. So, when you see this, Todd, right, you're going, okay, you got the lower high, lower low, higher low, and now you're coming up here. This just blew that off. So at this point, you're going to enter into the market right here, and your stop's going right here.
Yeah,
that's clean.
And the reason I do that is because I can take this trade every day.
No, that's the mindset you need right there. Like 100%.
on the 2 minute, I use a 9 EMA.
Yeah.
And I'll enter that trade, and I'll say, okay, I won't close this trade out until we get a bar close above the 9 EMA.
Yeah.
I'll just sit there and just watch and watch
and
watch and just wait. It's just a simple little rule that you can make to yourself, you know.
I'm actually glad you brought that up, because that's that rule right there. Like, hey, until we close below the 9, I'm staying in. And one that I like to do too is until we break the previous candle, I stay in.
Yeah. Mm-hmm.
Like I'll just boom.
I'll trail the top of a 2-minute bar.
Yeah.
Sometimes
I'll even drop to a 1 minute to do it if I'm trading larger size. And like, those are little tools you can use that will exponentially, and what it does is it helps you make decisions not based off emotion. It helps you let the market tell you when to get in and out. You know what I'm saying? And that's powerful.
Trade, I try to think about what should happen next. Like, we just respected the 20. We closed below the 9. What should happen next?
Yes.
Well, the seller should put it down to a new low.
Yeah.
Okay, we got another green bar. It didn't break the 9. Oh, here's another red bar. Took out that green. What should happen next? We ought to go to a new low.
Yeah. And
I kind of read the bars. What should happen next? You know.
That's what I call rational thinking, bro. That's like, that right there is you're letting the market tell you what's gonna happen, not your emotion, right? Like think about that. Like, you're going, like, this trade right here. So I went short on this trade right here. I entered in short, and I'm targeting this guy. So how did we get here, right? Well, we opened above all-time high, and immediately sellers come in and completely disrespect the open. How do we know sellers are in control? The GBI, right? The GBI was very clear here that sellers had the ball. So we rally down into 672, and we get another GBI. Now, I seen this, and I'm looking at this on the 2 minute, and I'm like, oh my God, that 20 was respected flawless. It got away from me a little too quick. I didn't want to risk, because this risk right here was about, was it like $1? It was almost like 80 cents. So I didn't want to risk that. So I'm like, okay, let's see what happens. I know I'm looking at the 2 minute, and I'm going, dang, we're pretty far away from the 20. So let's see what happens, right? So I'm patient. Like, I once again, like you said, risk down approach, right? Like, I don't want to entertain anything that's going to make me vulnerable. I want to play off the 20. So price then starts to come back in towards the 20. And right here, we get a green bar that's ignored on the 5 minute. And right when I seen this, the old Josh, I've been down this road so many damn times, I used to go short right here. And then what would happen is I would get stomped out right here, okay? I would go short here, get stomped out here, and then price would continue it on in that direction. So now I realize I don't want to enter far away from the 20. So I'm like, okay, let's see if this green bar that was ignored, this area of value, can hold. And now to the chart on the right, look at this thing. Couldn't break. Literally, sellers are in control. Every time you see an RBI or a GBI, guys, like, it really means a lot, right? And if buyers did take this, then I would have been more bullish. So once again, I don't feel any urge to like rush anything. I'm allowing the market to tell me. I'm like, dude, well, like Todd just said, what should happen next? I just got a green bar that was ignored. So basically what should happen is this area of value should get respected. And it is. So I'm looking for that play off the 20 though. I don't get it. But I do get another green bar that was ignored. So at this point in time, I'm hopping right directly into the market short, and my stop's going right here. Okay? So I still found a way to participate in this with low risk, super high reward, right? I'm getting in here. It's about a $2 move to the downside. Josh, you missed this. I don't care. I don't need perfection. This trade made me almost $1,000. Think about how hard we've worked in our life to make $1,000. This trade right here literally made me like $970. And all what I'm doing, and one more thing that really helped me here, was look at the 9. So notice on this candle, because I just want to point this out because Todd just said this. Notice on this candle, we're closing on it, okay? And now in this candle, we're closing below it. This is so bearish. Like anytime you see something like this, where price closes above the 9 and then back below it, this is usually means there's very aggressive selling, and you're gonna get a push, right? Because that moving average reference again, it's got to reference out, and it's got to get far from the moving average again, and then balance out, right? So really good play right there. Phenomenal short play. And then for the rest of the day, I mean, look at we got this green bar right here that's ignored. Oh my bad, it's a little big. Hold on. I just want to point this out. I didn't trade this, but once again, look at here. We get a green bar, disrespected. Right here is the AOV, right? Price comes into it, retest it. Look at this, Todd. Can't close outside the 20. When you can't close outside the 20, this is on the 5 minute. I don't care if it's on the 5 minute, 2 minute, 15 minute, 1 hour. It's a principle that really helps us understand that whoever is the dominant trend, in this case it's sellers, can't close outside that 20. That would have been a phenomenal short play right there, targeting the lows.
No doubt. No doubt. And I see a lot of people, and I used to have the same problem, try to take longs on that. On it.
Oh yeah, right here.
A lot of traders, or even on that big green bar or something, or reversion to the mean trade, whatever you want to call it.
Yeah.
If you do that long enough, you're gonna get wrecked. I'm telling you, you gotta have rules for yourself.
Yeah.
For if you're gonna go long that day or short that day, you can't play both sides.
No.
And you keep doing that long enough, you're gonna get wrecked.
Well, I think
like I've always said, I trade a 5-minute chart and a 2-minute chart next to each other.
Yeah.
Now I take a lot of trades off the 2 minute. We break the 2-minute 20. I'm not taking a long.
Yeah, right.
I'm going to my 5-minute chart, and I'm looking what happens at the 5-minute 20.
Correct.
Then I'll take a short off the 5 minute.
Yeah. That's very
That morning I may have took a short off the 2-minute 20, and then at 11 o'clock I'm taking a short off the 5 minute.
Well, actually, let's look at that because you bring up a phenomenal point. And what Todd's talking about, right, is like this overall momentum here is bearish. Sellers are pretty dominant, but Josh, what do you do right here when they're clearly not immediately in control? This is where, like, the 2-minute 20 has broke, and now we're getting a retest off the 2-minute 20. Josh, you said always trade the 20. Okay, but understand the context, okay? What's the context? On the 5-minute, we have dropped below previous day high. We have dropped below end of day. This is why our pre-market plan is built as such, right? Like, the story is bearish as soon as the critical level, which in this spot was PDH and EOD, is broken. Okay, what's the highest probable move? Well, we have the 1 hour trend here, trending down. And we also have a 5-minute area of value. So price is starting to rocket up towards it. I'm saving my money because I know when price comes back up into this zone, there's a very high chance that sellers are going to take it. And I know this because I've lost a lot of money trading against it, and I've made a lot of money trading with it, right? And the data's in. You do way better trading with it. So we missed this short play, and even still, I'm like, dude, we're not going long, okay? I'm going to wait for this retest now because this is a area of value. It's a green bar that's ignored. So what happens? We get this candle right here. Let me zoom in. On the 5-minute, that gets disrespected. So what do? I drop down to the 2-minute. I see right here the 20 being respected. I'm in it short right here. My stop loss right above it. I put my stop right above here. Once again, trading with the momentum of the market. And I was able to capture this really nice move here to the downside. Once again, not perfect. This trade right here made me around $400, for like $420 of one SPX contract. So once again, that's a car payment. Like this trade right here is a car payment, depending on what car you drive, but still, it's not perfection, it's not pretty, but it's highest probable, and it's clear.